I think commodity investing has become more fashionable of late because of the overall global demand for the commodities in question. This has brought about significant price increases within the commodities themselves over recent years and brought a lot of press attention at the same time. Also, commodities have become a lot more accessible to individual retail clients and are no longer the domain of institutional investing only. You can access commodities in a number of ways. You can invest in direct equities, so buying the individual shares of, say, oil companies or mining companies. Alternatively, you can buy index tracking instruments such as exchange traded funds or exchange traded commodities. Alternatively, an investor may wish to go for a more geared type of instrument such as a covered warrant or a listed structured product. There's information on the Selftrade website about each of these instruments. You can gain exposure to a whole host of different commodities. You can invest in precious metals such as gold, silver or platinum. You can invest in industrial metals, so copper or lead. Alternatively, there's the agricultural sector, so coffee, cocoa, wheat, sugar, for instance. And then, of course, there's the ever-popular energy sector, which contains the oil. You can invest in commodities in different account types which are tax efficient, such as ISAs or SIPPs. These type of accounts protect your investment gains from capital gains tax and additional income tax. Alternatively, if you have used your allowance for these types of accounts, you can always make use of your capital gains tax allowance. Although commodities have risen significantly over previous years, this isn't guaranteed to continue in the future, and past performance is not a guide to the future. Also, you should not rely on just one particular asset class within your portfolio, so you shouldn't just rely on commodities. You should look to broaden your risk by broadening your portfolio and diversifying. Also, certain instruments which I've mentioned carry higher risk. Covered warrants, for instance, the price of covered warrants is generally more volatile than the underlying, and therefore if you are going to invest in any type of instrument, you should make sure that you understand the risks before doing so.